Hello and welcome. Thank you for joining us on Business Incorporated, coming to you live from Lagos. I'm Chimeze Obi Iwagu. Coming up today on the program, Ghana begins pumping crude from a second offshore field operated by British company Tullow Oil. Chinese state-owned Beijing Automobile International Corporation signs a deal to invest 11 billion rand in South Africa's Eastern Cape province. Plus, Egypt asks JP Morgan, Citi, BNP Paribas and others to lead management of its international bond offer. Well, let's begin here in West Africa, Ghana precisely. That country has started pumping crude from a second offshore field operated by British company Tullow Oil, hoping the additional revenue will boost its flagging economy. The Tuembo, Enyara and Ntome field expects to average around 23,000 barrels per day in 2016, eventually reaching 80,000 barrels per day, along with associated gas to be harnessed to ease a domestic power deficit. 10 for short, with estimated reserves of 240 million barrels of oil and associated gas of 60 million barrels equivalent, is Ghana's second oil field after the country's flagship Jubilee project, also operated by Tullow, which began in late 2010. The revenue from 10 is significantly less than was first anticipated when the country launched the project in 2013, owing to the slump in world oil prices. In the meantime, Brent crude oil prices rose above $51 a barrel on Friday to hit an 8-week high and was on track to rise for a 7th trading day, as hopes that producers could agree measures to support crude buoyant sentiment. International benchmark Brent crude oil futures were trading at $51.15 per barrel, up 26 cents from their last close. Brent prices remain in a bull run that has lifted the market by over 20% since early August. Brent earlier hit $51.20. U.S. West Texas Intermediate crude futures were at $48.67 a barrel, up 45 cents. I'm moving now to global market and beginning in Asia. Shares there were higher as oil prices rose above $50 a barrel on speculation major producers are going to reduce output. Crude prices that have risen more than 20% since early August, meaning oil has swung back into a bull market. Japan's Nikkei rose 0.4%, while the broader topics also increased 0.4%. Australia's S&P and ASX 200 closed 0.34% higher, while New Zealand's NZX 50 gained 0.3%. South Korea's Kospi index closed flat at 2,056.24. In Greater China, Hong Kong's Hang Seng reversed early gains to stand 0.2% lower, while the Shanghai Composite was little changed at 3,107.03 in afternoon trade. And in Europe, now we cross over to Frankfurt Stock Exchange, where DWTV Channel's TV financial correspondent Conrad Busen is standing by to talk to us. Good afternoon, Conrad. Now, German automaker Volkswagen plans to halt production at its core factory in Wolfsburg and plans to cut hours at some plants. What's driving this move? Is it still the emission scandal issues?
It's somewhat related, I have to tell you. It's that after the scandal came out in last fall, Volkswagen had to really take care a lot about the cost. It's facing enormous payments, not only in the United States, fines, settlements, payments to clients. And purchasing managers of Volkswagen have been trying, because of this, to cut costs wherever they could. They also were said to pressurize some of their contractors to go down with payments and give discounts to Volkswagen. And if they declined to do so, the purchasing managers of Volkswagen were said to put pressure on these contractors, saying, if you don't agree to those discounts, etc., then you won't get a job anymore from Volkswagen anywhere in the group. And that is a tough threat for a contractor, and that's what the rumor goes.
Well, while Volkswagen is trying to deal with that issue, Turkey plans to join the EU by 2023. Just wondering how feasible it is. And of course, if it does happen, what will be the implications for businesses?
Well, many people in business sort of would welcome the step because it would mean that we have, a larger economic community. Turkey is a country with a lot of potential, with many consumers, and with a great workforce. Education has been getting better there over decades, but also, on the other hand, many people here perceive Turkey as a country that is struggling to keep democracy. Erdogan is not really some president to be in favor of democracy, and what's happening now at the moment in Turkey is making many people nervous. The judicial system is being sort of torn up, and it's quite doubtful whether you can trust if you do business with Turkey. That's the main reason why nobody really here believes that Turkey will eventually join the European Union. There will be some sort of special status. That's the wording also that the German Chancellor has been using, but there won't be full membership.
Well, Conrad, let's wrap up this conversation. It's the last trading day for the week. Could you wrap up the week for us and give us an outlook for next week?
Well, the last trading day is sort of a typical trading day. Look at this. It looks a little bit nervous sideways trading for the DAX at the moment. But mind you, it's on a high level. You don't find a lot of unhappy faces on the stock trading floor right now. Next week, we'll bring many opportunities to discuss the economy and discuss interest rates. We'll be seeing purchasing managers indices coming in from many countries here in Europe, also the United States, also China. We will also be seeing a speech by Janet Yellen, the Fed chairman, in Jackson Hole, Wyoming, by the end of the week. Also, the GDP of the United States will be updated. So many opportunities to discuss interest rates and the economy. Many companies also will come in with their earnings. For example, here in Germany, Douglas, the large retail chain operator, and also Fielmann, a company selling optical glasses in the United States. Hewlett-Packard, for example, will be among the companies that still report about the last quarter.
Well, Conrad, we look forward to those data coming out next week. In the meantime, enjoy your weekend. Conrad Busen, DWTV, Channels TV financial correspondent, reporting there from Frankfurt Stock Exchange. Well, we'll move on. And of course, Chinese state-owned Beijing Automobile International Corporation has signed a deal to invest 11 billion rand. That's about $823.30 million dollars in an industrial zone in South Africa's Eastern Cape province. The deal will see BAIC open an automotive manufacturing plant in the Kwega Industrial Development Zone near South Africa's Nelson Mandela Bay. And Saudi government officials have defended a decision to allow migrant workers to return home after workers voiced their anger over unpaid salaries. The challenging lives of workers stranded for months in crowded dormitories and labor camps with little money and limited access to food and water has shocked their home countries, drawing unwelcome media attention to the plight of some 10 million foreign workers on whom the Saudi economy depends.
Migrant construction workers abandoned in their thousands by Saudi employers in filthy desert camps during the kingdom's economic slums say the government's offer of free flights home is not enough unless they receive months of unpaid wages despite living in squalid conditions. Countries including India, Pakistan and the Philippines have sent senior officials to Riyadh to press authorities to assist their workers. Indian officials said this month that more than 6,200 former Indian employees of Auger were stranded in Saudi camps after being laid off and owed wages.
Our government sent $500 million pesos as initial public financial assistance to our migrant workers.
The government says it is trying to resolve the situation by giving the workers who normally need their employer's permission to leave the country the right to go home and free transport back. It is also granting them special permission to stay while they look for other jobs.
After the break, research analysts at Exotics Partners London recommend a buy on Nigeria Treasury bills. Details in a moment.